And it's good to have you join us again. Now, the Monetary Policy Committee of the Central Bank of Nigeria raises interest rate by 25 basis points to 18.75% from its previous level of 18.5%, the highest interest rate the country has seen in 22 years. Now, the acting CBN Governor Folashodun Shonobi, during a press briefing on Tuesday, made the official announcement following the conclusion of a two-day MPC meeting. Inaugural MPC gathering chaired by the newly appointed acting CBN governor will take over after the suspension of Godwin Emefiele will also be marked. The first MPC section under President Bola Tinubu's administration. Now, according to the committee, the decision to implement a further interest rate hike was driven by concerns over the escalating inflation rate and the country triggered by the removal of fuel subsidy. And now, for more insight, James Oladisa, research analyst at Chapel Hiddenham Limited, joins us now to make sense of this development and the impact on businesses and economy at large. Thank you for joining us, James. We appreciate you for coming on the program.
Thank you very much for this opportunity.
All right. So Nigeria Central Bank just implemented the highest lending rate in history, let me say in 22 years, increasing it from 18.5% rather to 18.75%. Now, so what are your thoughts? Because the CBN governor said, the acting CBN governor said the decision was based on inflationary pressure.
Yes, well, so my thoughts on the hike in the MPR, are that, first of all, I think if you look at the factors that were mentioned during the Monetary Policy Committee meeting, one of them was that, there is expected to be a significant liquidity injection into the system. We know that the recent policies that, the new administration has rolled out, have an impact on liquidity. For one, we expect that, with the liberalization of the exchange rate, the deregulation of PMS, we would expect to see more liquidity come into the system. And that makes the rate hike credible because, he's trying to, increase the MPR to 18.75, as a means to curb the effect of, that injection of liquidity into the system. The second thing is that inflation remains, stubbornly high, and given that NBS has even come out to clarify further, that they only captured the first 2 weeks of June. We can expect to see inflation numbers trend northward, and in a bid to be able to curb inflation, which is, eating up on investors' returns, we're seeing that the MPC, is hiking rates. So I think that those 2 points are, major and very important things to note, about the decision that was made.
Okay, but do you think the 25 basis point interest rate hike is a necessary move by the CBN to tackle inflation? How tangible is this?
I think it is. I think it is. It's a new approach. They are now moderately hiking rates instead of the aggressive stance that they had before, and this is because they are currently aware of the fact that they want to support investments, which would ultimately lead to the recovery of output growth. And it's important that they bear in mind these 2 things, in making their decision. And a moderate rate hike seems to me like the right way to go. They were to give more context. I would say that they were between a ball and a rock, and because of that, they were not able to, make other decisions or, take other steps to be able to curb inflation, which is eating up on investors' return, as I mentioned earlier. But 25 basis points is not aggressive, and it shows that they have a concern for, improving investments in Nigeria.
Oh, okay.
Investment returns.
Okay. All right. So let me ask you this, but how do you think, let's look at this, of course, even though it is not aggressive, but how do you think this rate will impact businesses and investment in Nigeria, and how do you think the investors will react to this, inflation rate, or adapt to the changing financial landscape? Talk to us about this, especially the performance of business.
Yes. So how do I think investors would react to this change in the stance of the MPC? So if we take the whole decision, all the entire decision that they made as a whole, we see that aside from the rate hike, they also narrowed the asymmetric corridor around the MPR. And the reason why they did that was so that they were able to attract banks or people that are investing to the SDF window, so that they can earn some more. And that would mean that they would now be shying away from the short end of the curve, and we would see the short end of the curve go up. Now, if that happens, right, which we saw play out in the primary market auction, when that happened, we would expect that the yields will become more attractive to investors that are willing to come into the market. And I think that that's part of the end goal of the whole decision that was made by the Monetary Policy Committee.
Well, so you talk about the asymmetric corridor and the liquidity rate. I beg your pardon, the cash reserve ratio. Yes, we do know that the cash reserve ratio is at 2.5%, liquidity ratio at 30%. The ceiling between borrowing and all of that, the bottom and the ceiling is 100, 300. So talk to us how, if you pull these together side by side with the interest rate and the amount of money in circulation, so how significantly with these change equation of things in the market or in the economy?
So how significantly would it? Well, we have to note that there is a cap for the amount that can be kept in the SDF. That can be, yes, that banks are allowed to put in the SDF rather. And what that would mean is that above 2 billion naira, and there would be little to no interest on the money that the banks keep in the S, or use the S to the limit with which the banks use the SDF, right?
Right.
And if that happens, we would expect that it would kind of sterilize liquidity. But we also know that looking at the coupon payments, looking at FAC allocation increase, we would expect to see system liquidity improve in the rest of the year. And if they are just to put 2 billion, it would have an impact, but it will not totally, wipe out the liquidity that is set to come in, coming in the remaining part of the year, and if that happens, they are just what they are trying to do, is just to keep liquidity in a particular range so that they can monitor, yields at the short end of the curve.